Okay, all right, Mitesh, thank you very much for that. So those are trading ideas coming in from our technical experts. Ambareesh Baliga is with us this Wednesday afternoon. Ambareesh, good afternoon. Good to have you with us here. The market is now, displaying the opposite of what everyone has been used to, which is not buying the dips, but at higher levels there is consistent selling, which seems to be coming. Nothing dramatic like yesterday, but there is selling. Your thoughts, Ambareesh? I mean, what is top of mind right now? Is it, the budget is still, what, 2.5 weeks away. Earnings are yet to get into the full flow of it. To your mind, what is top of mind?
Good afternoon, Prashant. Basically, we are in a range, a broad range of 17,800, which is a very good support. And there's a very clear resistance band of 18,200 to 18,400. Crossing this will be quite difficult. And looking at the earnings, although TCS, came out with the muted growth, and people are still quite cautious on IT. But I believe that we should see muted growth across most of the sectors. Barring a few, possibly like auto should be really good. But most of the others will see muted growth because, we could see a lot of inventory losses because, most of the companies have, stocked up huge amount of inventory, and especially in commodities, we have seen the prices coming down. So there could be inventory losses which should be booked this quarter. So margins would be under pressure. And again, we have seen FI continuously selling, so there will be no support from that side. So I believe that at least the first half of this year, would be quite flattish or maybe negative. In fact, if we break 17,800, we could see even levels of closer to 17,000 or below. I think that's where the valuations becomes quite decent for fresh purchases.
Okay, hi Ambareesh, good afternoon. Ambareesh, normally you join in and you give us one particular stock. I believe this time around you're tracking, IRCTC. Give us a rationale out there.
We have seen IRCTC doing extremely well since listing, but then we have seen weakness recently, and this is due to a couple of reasons. Earlier we had seen that it was hit by that convenience fee controversy, and then there was a controversy regarding monetizing of passenger data. So this weighed on the stock, and in the last 2-3 months, we have seen that the Q2 earnings which came were lower than expected because catering and rail division, didn't do as well as expected, and we have seen EBIT losses in tourism segment. And lastly, in December, we saw OFS was done at a steep discount, so this also put off a lot of investors. But now I feel that most of these negatives are already priced in. And now we should see catering price hikes happening, as well as there's a huge expansion happening in rail division. So this should also start contributing much more than what it was doing earlier. And the big kicker, I think, will be the 100 sets of Vande Bharat Express, which will be introduced over the next 2 years. I think this will be a major kicker on the revenues going ahead. And we should remember that IRCTC is the only private train operator with experience of operating 3 trains. So we should see more coming in out here. So for FY25, my expected EPS is about 15. And based on that, my target price is about 825.
Okay, all right. Ambareesh, I want to ask you about a couple of these steel names. But let's run you through what JP Morgan first believes on steel. They believe that more price hikes are likely to be on the cards. They are highlighting the fact that Chinese steel prices have moved from around $500 per ton all the way to around $620 per ton, and some deals are happening even at $635 per ton. Going ahead, they're expecting demand to come back. Remember, the Lunar New Year is there, so post that they're expecting demand to come back in style. Domestic prices, yes, they're up by close to around 1,500 rupees per ton, but now the cost of landed imported steel is hovering at roughly around 60,000 rupees. That would mean there is still a price difference between domestic steel and steel that's being imported. So because of that differential, they are working with a 3,000 rupee price increase in the next 2 to around 3 months. They take on both, though, that coking coal costs have gone up. But they are saying that the benefits will outweigh, the negatives, and that's why they're working with solid earnings growth for these steel majors. Given the hopes that there is on higher steel prices, some of these stocks are holding higher. Ambareesh, your view on the steel names? They've made a good comeback. How much of it is already done? Do you believe there is more, a more up move that is in store?
No, see, one thing is very clear that this is not a super cycle. What we've been talking in the last 2 years, there is no super cycle in steel. it was an upcycle and then we saw a correction. Now I feel that this is a temporary upcycle because like over the next few months, we are surely going to see slowdown in US and Europe. And once this plays out, I really don't see the demand shooting up or because of which the price is going up for steel. So I believe this is a temporary upcycle. People should utilize this upcycle possibly to book out. In case one hasn't, in the last 6-8 months, I think one should do it now.
Ambareesh, to stay on, need to slip into a very short break, but here is an important information for all our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full